There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We're going to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now. Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. I'm reporting from the beach today because I think every trader in America must be on the beach because everyone's making boatloads of money. Markets are at all-time highs, S&P at all-time highs, the Dow, NASDAQ actually led the way today. And I'm sure everyone is going to get those phone calls and say, oh, you must be sipping on margaritas and gin and juice. Well, that's actually a song. And I don't think there are enough traders actually feeling that way. And I do think that there are individual traders that have participated with the rally, have been objective, have tried to use a portfolio approach, have tried to maneuver the ranges, and that road to S&P 1700, which we've been talking about for the past 2 years. But I don't think a lot of people follow through on what they want to do. And that's the key. The key is to follow through on what you want to do, but only follow through on what you want to do when the market confirms it. Now, on this road to 1700, we've talked about intermediate ranges, areas where we're a little bit questionable, but where you have to maybe pull back, figure it out, but then go neutral. I should be in a car right now, not on the beach, and then getting into another gear as the market gives you more clarity. And for just say 2013, there's been 3 different pivot areas that I want to talk about where traders didn't really know how we were going to handle them. But if you knew the pivot, and you knew what typically happens at a pivot, where usually shorts have to cover and the market gets back in motion, you would have known how to react and you would have a plan in order to move forward. You go to the chart now of the SPX, okay, and this is for 2013. You see how, this is where the trend started. This is your red dog reversal after that pull-in coming into the what was that, the physical cliff going on over there. And then, here was, the start of the year. So anyway, this was your first pivot. This was your 1474 pivot. Question was, would we get through this pivot and break above it and continue to 1500, or would we break through it and fail, or would we, negate ourselves right there? So that was your first spot. So right there in 2013, here was your 6-7 days of digestion. Here was your pivot to trade against. If you were short, that's where you should have covered, not rolled it up. And if you were long, I think that's where I went to my 13 to 15 longs, because at that particular point, I'm like, if we break above 1474, there's no reason why we can't see a move to 1500 plus. So what happened? We followed this accelerated trend line all the way up to a pivot here. Another pivot, write this down. This was what? 1530. This is when you had the Italian fiasco or the election or whatever they called it. You had your first wide range bar down that engulfed this range. That right there got me out from potentially 15 or so positions from the last break above 1474 to a bit more neutral. And then in this area, I might have even been net short. But what happened? Okay, you had support hold. You had another intermediate trend line hold, which is what I think I had this in here from there. Okay, and then we continued. So into this bounce back, you talked about what could you have seen to see if the bears had control. They would have held it halfway in, but they didn't. That was your short wake-up call. Okay, that was your get back into positions potentially. And then here is when I think we went back to 7-8 longs. Okay, different sectors, because different sectors keep changing hands. And then here's where you cleared that pivot. So there's your 1530 pivot. And then from there, you had to move up to about, what was this, 1563. And then this is when the Cyprus news hit. And then, we continued. This is your jobs number. Okay, remember that? That was a little scary, right? If you come back to me, nobody really knew what was going to happen. You might have had to, get off your, now we're in the mountains now, okay? You might have had to get off your bike or something and check out what was going on in the market. There's a little volatility. If you're a macro investor or an intermediate swing trader, not an active swing trader, you might have had to, maybe, get out of your hike and check the market and say, you know what? I'm going to look at that 1538 level, that 1530 level, which is where we broke out from. If we hold that pivot, chances are, things aren't as bad as all the headline writers think. So you go back to the chart, okay? So this 1538 was a decent spot to cover some of your shorts. I don't think many people were buying with two fists. Listen, I wasn't buying, all into this because you had no idea what was going to happen here. But I did, sell half my puts because remember, into this day, that's when, you had the Russell, you had the transports, you had the the home builders a little weaker. So it made sense, that we're going to have this follow through. And then also we put on that put spread. Okay, but then what happened? You take a closer look here and you will see some bears, okay, or some people looking for lower prices. You thought maybe you would have a head and shoulders top. And technicians, even myself, I said maybe that could happen. But what happened? What was your clue? Right here, this was your halfway mark, okay? Right here from what? 1573 all the way down to 1539. So just say round about 40 handles. So 1560 should not have really been breached. Okay, so right here, when it closed above this little area, right there, that's when you should have said, okay, you know what? I'm still kind of negative, but now let me be a little bit more neutral to negative. And then yesterday, when we cleared this area, and I know we didn't have enough power to break above that 1573, that should have been your clue saying, wow, remember retail is acting well, restaurant stocks, we went over that in the morning call, that's acting well. Money's rotating. That could have got a little bit of short off the brain. Okay, so with that said, you come back to me. We opened up at that pivot. We talked about 157.20 to 157.30. If you were still rolling up your shorts, if you even like me, I had, I think, 6, 7 longs on and a hedge. I said, we blow through this 157.30, I'm taking my damn hedge off because I don't want that to take away from my profits because I don't have enough longs because it's been a little tough to find out what's moving higher. We caught a few good ones, obviously, with Nike and eBay and Facebook and even Apple today and some others. But, at that point, I wanted to be net long, but I wasn't, I didn't have enough exposure. So I'm like, what do I need a hedge on? I should have flipped, but I didn't. I just took the spider hedge off, and those on my virtual trade floor saw in the first 2 minutes of the day, because I was prepared with 157.30-ish, that if we break above that, there's going to be another squeeze, and I want my longs to ride out, and I don't want to have a short on. And then at the end of the day, see where we are, maybe put the hedge back on just in case something happens with North Korea, with Slovenia, whoever it is, or just a 4 or 5 handle pull-in because we're up 20 today, to hedge against some of my other longs, which I think I have 6 on still. So anyway, go to the spiders because that's what a lot of people trade intraday. Here's the chart, okay? This was your area. This you could have thought really fast, guys. You could have covered right there at 157.32 when we took out yesterday's high and we took out this pivot high. That was your cover. That was your maybe get long, and you saved yourself at least another, $1.30 worth of pain. Okay, and who knows? Maybe you covered at the end of the day. But anyway, if you covered here and you still have 6, 7 longs, then you put a spider hedge back on to hedge against. You just had 4 days to the upside, so maybe there is some consolidation above this area. Who knows? But that'll also help you sleep at night. But you could have got out of the way there, or you could have saved yourself some pain. So with that said, there's always ways to limit your downside. There's always ways. If you come back to me, there's always ways to make changes. So if you came in with short in the brain, or the last few days you're like, okay, maybe we have a head and shoulders top, and finally we get this correction, you had 2 wake-up calls. You had 156.20, shouldn't have gotten above that, and then today shouldn't have got above 157.30. So if you were just trying to be short, you missed it. You had ways to limit your pain, but what also happened is you missed a lot of nice action in individual names, lots of different stocks. That's where the money's been made. Not trying to catch a top or call a top, but holding a portfolio approach in different areas, using a tier system to buy when they're breaking out, and then trimming it on the run, and then trailing it to hold longer. This week was an interesting week, for the morning call because we talked about so many different things because so many different things were working out. In the back of my head, what did we talk about? Oh, restaurant stocks. They were looking good. We go just run through a few of them. Here's Dunkin'. Okay, there was your high, holding up, still looks good. Nice move. This was a new issue. On the move, boom, okay? McDonald's, I think we spoke about. Look at that, at highs. Last week, towards the end of the week, we talked about Disney. Oh my goodness, look at this move in Disney to historic highs. 2013, Boeing's been on the forecast. Above this level, nice flag, there's new highs. There's just, and then we talked more about retail, right? What did we talk about? Walmart. Oh, look at that. Today wasn't the greatest day in Walmart, but who cares? Okay, this was one pivot right here at 72, and then here was another pivot coming in at 74, and then you had a nice move. Target also, these were the two pivots, didn't break out today. People are probably saying, oh, the move's done here, but meanwhile, money went elsewhere. Okay, doesn't mean the move's over, doesn't mean you're shorted, maybe you just give it some time. Talked about Nike. Nike also, not a barn-burning move, but look where it's come from. Okay, and look at this nice gap up. You had a decent add in Nike right here, okay, and then there you go, two new highs. It didn't break out and run to the hills like the mountains I was just in, but decent move. Then today we mentioned, or we started looking at mega cap tech, because I think people started to really just realize that rates are going to be low for a long time, and their money's sitting in the savings accounts, not giving them anything. It's like, oh, you know what, maybe I go after some of these mega caps that give you yield, that have liquidity, that are perceived as cheap in tech land. And we talked about this morning, me and Brittany, about Microsoft leading the way. Maybe an opportunity of Intel through 22, Oracle into the gap, Cisco, which has been okay. And then look at them, the highly liquid names. Microsoft started negative. Look at that second move. Look at that area. It still has room to 31 and change. Intel woke up yesterday, put itself on the radar with an igniting bar. And then here, boom, second day follow through, holding, reclaiming the 200-day almost, but that's nice action for Intel. Oracle, if you didn't get trapped, we talk about getting into the gap. It went into the gap yesterday, so some people took it home long, and then here's your follow through into resistance for another trade. So many different things. Even today, Apple gave you a little trade. Not a blockbuster trade. It's crazy that this is what Apple is now, but I'm long a little. We made a little bit of money today. Nothing to write home about in Apple, but you had this small little trend line break. I think we had it listed on the price point sheet around 430 and change. It closed decent. Who knows? Maybe you get some follow through tomorrow. Double bottom 419, but still a laggard. A lot to prove before earnings. At this point, we're not enamored with it. Last time we went through 435, it went to 470. Nice trade. This one, we'll see what happens. Hopefully Tim Cook helps us a little bit. Anyway, also goes to show you something like Google. Google, I was too tight on yesterday. I was crying that I went through what was the number in my head? 780, 350. I don't know why I remember numbers. I can't remember to take out the garbage, but numbers I remember. Pushed through by a quarter yesterday, and then fell $5, got me out, and then I didn't go back to it today. And then look at Google. Just goes to show you that, if it doesn't happen the day you want it to happen, it doesn't mean it won't. So for a trade, guys on the virtual trading floor had a nice little push through here, okay, to close the gap. And I know it's not a leader, but, nice amount of points here in Google if you traded versus pivot. So lots of things to do. The financials, Goldman, nice bounce. You go take a quick look at Goldman. Here is a corrective type activity, triggered above 145, boom. Not leading the market to the upside like it did, back here in January. So everyone's saying, oh my goodness, we're not confirming this market rally because look where Goldman is. Doesn't matter. There's other things going on. There's things going on in pharmaceuticals. We talked about that too. Look at Celgene. My goodness, what a move. If you want to be in this sector, there was some decent action. Remember talking about this at 100? And then this nice flag pattern to go to highs. I know today we looked at ALXN, didn't really work out that well, but closed decently, and who knows, that can continue. But there are so many other names in that group. So the bottom line is, if you come back to me, actually I want to be on the beach. Put me back on the beach. Let's see if we could turn this Starbucks container into a daiquiri. Can we do that back there? We don't have the power? Okay, anyway. With that said, we have a green screen. I'm having some fun. There's just, there's like a disconnect. This time around, it feels like no one's really celebrating. I know people who have a 401k that have been putting monthly money in, whether it's 10 years, 20 years, 30 years, if they just stayed the course, they're probably celebrating when they look at their statement. People that are stock pickers that learn how to use relative strength, that read IBD, that look for new issues within the last 2 years that have the potential to be blockbuster gainers like we've seen. We've talked about the three amigos, which were Dunkin' and Coors and LinkedIn, last year, that are doing well. And then also picking stocks. The high beta name of the year was Google, and last year the retail stock was Walmart. This year, like we just try and put things out there. And you're not going to ever make a lot of money with things that we put out there, because if you don't understand why, you're not going to have the conviction to do it. When we come out with our each year we come out with predictions. Try and do it in December of what we think will happen the following year. And it doesn't necessarily mean it's going to happen, but at least it's a plan, and then you wait for the market to confirm it. And in this 2013 thesis, if you take a look at the 7-8 names we had on there, from Japan to Toyota to Boeing to Yahoo to some calculated tactical things in Apple, to so many different things, and Bank of America, there are ways if you want us to spoon feed you, you can make money with some of the plays. If you want to learn how we actually put on these positions by using our courses, whether it's the swing trader course, which is my course, the momentum trader course, which is awesome, the active trader course, or we have a super conference April 26th and 27th in Boca. If you want to come meet us face to face, we're all going there. We're all going to give you a little bit of our secret sauce on how we go about our day and what makes us consistent and hopefully successful, and how we're going to build on that. These are things that you have to take on yourself to change and to do in order to put yourself in a better spot. Because if today you're feeling blue and you're feeling like you're going to walk out of your office with your head down, or you're going to leave your house like, oh my goodness, you're cringing to get that phone call from a relative saying, oh my goodness, you must have done so well, markets at all-time highs, and you're like, not really, then make that change. Because even me, I've tried to ride this trend. I feel like I could have done a lot of things different, and I'm going to learn from it. I'm not going to just dwell on it. So don't dwell on things that are in the past. Try and learn from them. And the only way you're going to be able to learn from them is if you take accountability that you actually did some things wrong. You had some opinions. You didn't honor your stops. You didn't look at the pivot areas and make changes or adjustments in those arenas. You stayed with old stocks that might not have been as in play. You didn't look for what was working. There are so many different things that mix up in this formula where we all have something to work on. So again, with that said, keep your head high. If you're watching this, you're taking a step in the right direction. I think a lot of people in the chat room in the VTF, we're kind of high-fiving today, so that's good. That means they're learning. That means they're taking money out of the market. That hopefully means they also have a long-term plan with other things that are helping them financially. And tomorrow, I'm looking forward to releasing an interview with CeeLo Green. Hopefully you saw the teaser. It's about a 10, 12-minute interview which goes over his routine, his busy schedule, his approach to his day-to-day, how he's making a journey to health to help himself, to help keep him going, how he also has people working for him in the market, and how there have been many people out there that have made a lot of money as an athlete, as a musician, but then 5 years later they're like bankrupt because they also don't think that they need to approach the market with a plan, with transparency. So everyone's attention right now is on the market because a lot of people missed the boat, and a lot of people want to learn how to maybe get on the boat, and you also probably can learn how to drive the boat. And that's probably, as I'm on the beach, that's a good analogy. So anyway, relax. It's Wednesday. It is only April. There's a lot of year left. If you're not where you want to be, do not revenge it. Do not try and put yourself in a position to catch up, because it's not going to happen that way. You have to make small steps. Put some green days together, get some confidence, get some footing, then you'll get bigger green days. If you're out of the market and you want to come in the market, don't just send all your money in your bank to whoever it is that's dealing with it. Hopefully you're pushing the buttons yourself. Piece in with a plan and put yourself in a better position if you're not walking out of wherever it is you are, whether you're on the beach or in the mountains or in your house or in your apartment or wherever it is, with a smile on your face, because life's too short. You should have a smile on your face, especially on a day like today. Have a good night. See you tomorrow morning.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, Joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.